Vici Properties. Today we are doing analysis of Vici Properties, the leisure REIT. Things you might find interesting in Vici's analysis is their occupancy rate, lease terms, and their own buildings such as Caesars, MGM Resort, and Venetian. Business overview. Vici Properties is a real estate investment trust specializing in experiential properties, primarily within gaming, hospitality, and entertainment sectors. Vici Properties was established to own and acquire properties that generate revenue through long-term leases to high-quality tenants. The company aims to provide stable, growing dividends to its shareholders and has done a pretty good job in its semi-short history of existence. What makes Vici special from other REITs and other lesser REITs is their long lease terms, good growth, and high occupancy rates. So to put it super simply, Vici focuses on buying and leasing leisure buildings with contracts that require the tenant to take care of the property. History. Vici Properties was formed as a spin-off from Caesars Entertainment Corporation as a part of Caesars bankruptcy reorganization in 2017. The spin-off was designed to separate the ownership of real estate assets from the gaming operations, creating a focused REIT. Vici was IPO'd in 2018. As of 2024, Vici Properties owns a diverse portfolio of over 40 properties, primarily in the leisure sector. In summary, Vici Properties has quickly established itself as a major player in the real estate investment sector, particularly in the gaming and hospitality industries. Vici's financial history is also superb if you don't take into account how the company came to be. Revenues has been growing every year by every metric. FFO and AFFO has also been growing but haven't been as stable growth as revenue. So some sudden dips can be seen. Dividend is also been systematically growing, although to me, dividend growth would be useless if the FFO wouldn't be growing as well. So the only risk I can see from the history is if there is a widespread disruption in the leisure market, like a pandemic or something else that disrupts the leisure sector. Another risk I see is the concentration of Vici's portfolio. If something were to happen to Caesars or MGM, it would mean big trouble for Vici. These two account around 74% of the total rents coming in, but as for now, they seem to be in a good, stable standing. Future estimates. Vici's future seems bright, with them diversifying their portfolio to be a bit safer. They are also investing in more properties with cap rates of higher than 7%, which should lead to some FFO growth. Vici is in the REIT business, so they give out a lot of their profit as dividends, so I don't assume the growth to be too high, but better than, for example, realty income. But then again, the rise in interest rates aren't helping Vici, but maybe in the future, the interest rates are going to go lower. Intrinsic value. For REITs, it's important to look per share metrics because they issue a lot of shares to fuel their growth. Of course, it's also essential to make sure normal metrics are growing too, to avoid company growing only because share buybacks, but not as important in case of REITs. Based on history, the company's revenue per share has been growing middle double digits for the past few years. FFO per share has been growing around 10% for the last few years, but some high volatility on the growth. Dividend has been growing around 7.9%. Based on future, Vici is not expected to grow fast because of the interest rate environment, and analysts agree on that. Analysts expect growth estimates to be around 3 to 5% for the future. So, based on history and future estimates, I would estimate around 4.5% growth for the next 5 years, and after that, around 3% growth for the next 5 years. Now, Vici's PE multiple is quite low, and I believe Vici should have a little better multiplier based on the occupancy rates and lease term years. Based on history, I would assume Vici would be trading on a price to FFO ratio of 14. The average PE ratio in the past has been around 15 and even higher than that, so 14 should be attainable. And I will be using a discount rate of 12% to have some margin of safety and to get a double-digit return. With these numbers, we can calculate the intrinsic value of Vici. We get to an intrinsic value of 33.59, which is higher than the current price for 12% return. And here are some prices with the same growth estimates but different discount rates. So, in summary, Vici is a stable quality business, but with some risks like concentration of the portfolio and the interest rate. For me, the company is a buy and is currently in my portfolio as well. Thanks for watching. Hit the sub and comment below what do you think about Vici or my analysis. Is there another crisis going to wipe out Vici to bankruptcy or smooth sailing for the next 10 years? Comment below. And as always, don't lose money and safe travels.